I've been buying every 2 weeks for 35 years. I remember gold at $250. I remember silver at $3. And so here we are at 3,000 and not a damn word by the media. Silver is that opportunity that you missed in gold because it should be a whole heck of a lot higher by every metric. And it's coming out of the ground at a 7-to-1 ratio to gold. So if you have gold right now at $3,020, if we take 3,020 and we divide it by 7, which would be the geologic ratio right now, you're at $435 an ounce. So if you told me tomorrow morning gold would be over 400 or silver would be over 400, most people would laugh, but I would say, well, that's actually logical. That's the geologic ratio.
Gold has been on an unprecedented rise, reaching over 40 new all-time highs in 2024 and an additional 14 so far this year. The jump from $2,500 per ounce to $3,000 per ounce took just 210 days, an acceleration that highlights the growing momentum behind the metal. In contrast, previous $500 per ounce increases took an average of 1,700 days, making this surge one of the most significant in history. According to Andy Schectman, CEO of Miles Franklin, gold has risen by $500 in just 210 days, the fastest increase in history. Hedge funds have reduced their exposure to major tech stocks, while institutional investors have increased their gold holdings by 45% since 2021. Additionally, insider selling is outpacing buying at a 7-to-1 ratio, indicating rising caution among corporate executives. Further underscoring this shift, the ratio of the S&P 500 index to gold has fallen to its lowest level since the pandemic began. A strategist at State Street Global Advisors notes that this trend signals a preference for safe haven assets and serves as a warning sign for both the U.S. and global economies. Schectman argues that Western financial institutions have suppressed gold and silver prices to uphold the dominance of the dollar in bond markets. However, more nations are recognizing gold and silver as true stores of value, leading to a shift as central banks and investors seek alternatives to traditional financial instruments. At the heart of the precious metals market, bullion banks, members of the London Bullion Market Association, play a crucial role. As market makers in the global over-the-counter precious metals market, these banks facilitate large trades, manage vaulting and storage, and participate in price-setting mechanisms such as the daily London Gold and Silver Fix. Their dominant position enables them to exert significant influence over silver prices, making market manipulation not only possible but also systemic. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Like aggravated by the lack of any type of recognition of gold and its all-time high. And I see it hits 3,050. And then I start to count how many times before it comes back up. And I'm noticing at the same time that I keep seeing Bitcoin. So it went 44 spins of the boxes, call it, a good 20 minutes before it came back up, gold, and then 44 other things. At the same time, during those 44, I counted Bitcoin 9 times. So in 44 spins of the indice boxes, everything from the Nikkei to the 10-year to gold to Bitcoin, to any of these major indices around the globe, CNBC wanted to show us the importance of Bitcoin 9 times as much as they did gold at all-time highs. And I think this is part of the reason that there's such a lack of understanding of gold. That has doubled the performance of the 10-year Treasury in the last 25 years. That has, when you look at it, its performance last year, it was gold up about 40%, and the 10-year Treasury up 4% in a market that is, net not seen any new central bank purchases of the Treasuries at all since 2014. Now, that's not to say that there hasn't been buying of Treasuries by central banks. There has, but the net, there's been more selling than buying. And that extra selling that normally went into treasuries, in my mind, has gone into gold. Why? Not only has it doubled the performance of the treasury over the last, at least since the beginning of the century, but it has no counterparty risk. And we've talked a lot about that, the weaponization of the treasury market. You and I have discussed that at length. And equally as important, and going back to the lack of journalistic integrity in the media, gold is the only other tier 1 reserve asset in the world alongside U.S. Treasuries. Why don't more people know that? It seems to me that should be something that everyone knows. If we know that the U.S. Treasury is the supreme asset, the most liquid tier 1 asset in the world, why would we not be told by an unbiased media that gold has been transformed or raised to a tier 1 status? Well, we haven't. So That's one issue, lack of understanding, and gold has outperformed just about every traditional asset for better part of the last 20 years. It's as I mentioned, double the 10-year treasury. It's beat the S&P 500 just barely, 9.9 versus 9.6 since 2000 with dividends reinvested even. So it's a strange time to say the least. And I think when you see that the United States, as we talked about last show, has become a net importer of gold since November, it becomes even more interesting with the largest deposits we've ever seen into the COMEX market ever. This should be front and center in the February contract. 5.9 million ounces of silver or gold were delivered. That's the largest delivery ever for a single month ever. JP Morgan, who only buys for their clients, according to Blythe Masters, who used to run their metals desk, delivered 4 billion in gold into the COMEX in February. Why isn't there more talk about that? Who's got 4 billion as a client to have shipped into the COMEX? These are very interesting times, to say the least. Gold has surged by $500 an ounce in 213 days, from 2,500 to 3,000. That's the fastest $500 price jump in history. No talk about it, no fanfare. In my mind, the smart money has already shifted to precious metals and in front of potential market trouble. At the same time, you have the hedge funds with their lowest exposure to the Mag 7 in over 24 months. You have a 7-to-1 insider selling to buying. At the same time, you have institutional investors who have increased their gold positions by 45% since 2021. And as I mentioned, the metal has outperformed the S&P 500 again over the last 24 months. You can go back even further and find that to be the case as well. The big money is quietly positioning.
Silver's price has long been subject to market manipulation, with the most common tactic being aggressive price suppression, often referred to as price slams or TAMPs. These occur almost exclusively during the New York COMEX trading session between 8:30 and 11 a.m. Eastern Standard Time, precisely when liquidity is high and price movements can be controlled most effectively. Whenever silver approaches a critical breakout level that could trigger a surge in buying, bullion banks intervene, forcefully driving prices back down. This calculated suppression serves multiple purposes. It discourages new investors, demoralizes existing holders, and ensures that silver remains undervalued, preventing any sustained momentum from forming. Despite these interventions, silver remains one of the most overlooked and undervalued assets in the financial markets. Andy Schectman, CEO of Miles Franklin, highlights silver's historical scarcity, noting that it is mined at a natural ratio of 7-to-1 compared to gold. Given gold's current price of approximately $3,020 per ounce, a fair valuation for silver should exceed $400 per ounce, far above its present suppressed price. Let's get back to the interview.
In gold and silver, when the West has suppressed it for so long to maintain an illusion of bond market and dollar supremacy, not just in the United States, but all of Western Europe. And this is the game that the rest of the world has now uncovered and pushing back against. You get mainstream guys like Jeffrey Gundlach, who is talking about gold easily at $4,000 an ounce here in the near future. He's a mainstream guy and, a bond guy. And he says a 60% probability of recession. I think that's low, to be honest with you. And why don't people say that in buying Dow stocks at 40,000 when I remembered at 2,100? And why don't they say that, the Bitcoin people at 90,000 when, Andy Hoffman, who used to write my newsletter, was telling me to buy it at 400. It's just a perspective that is silly across the board. And the one delineation that people miss is that they may be the only two products, or gold, silver, platinum, palladium, those four in terms of hard commodities, that have been suppressed openly. And it's not conspiracy theory. I mean, there's court cases, there's empirical evidence, there's JP Morgan, there's a million. Just look at the AM and the PM fix. There's a million pieces of information where we could have a 2-hour long debate about manipulation, and it's been there forever. And that's been the West's way to support this illusion of dollar supremacy of the fiat system. And Gibson's paradox, where you suppress interest rates for 3 decades, you have to step on the canary in the mine shaft. That's gold. So we don't even know what the real price discovery looks like. But, in a world where the Dow Jones can go to 40,000 and Bitcoin to 100,000 and, and the price of your home can triple and yet there's still value in it, right? Well, they have selective perception, if you will. So I think we're a long ways away. And silver, to that point, is that argument on steroids. It's the most undervalued, overly manipulated market on the planet, which holds the largest concentrated short position on COMEX, concentrated by a handful of 8 commercial banks that short the crap out of it. And for various reasons, well, whether it be the military industrial complex needing to keep it cheap to buy and make high-tech weapons, or any other story you want to believe. That's the one I believe it is, and it's not talked about enough. It's funny, you got BlackRock, who is the primary custodian of SLV. They would have all the vested interest in the world of suppressing the price of silver, all of it. And they also major players in PSLV because they're the ones who own all the military companies, like Northrop Grumman or oh, I forgot the names of them all. All of the big military companies that make the high-tech weapons, and then those weapons are sold around the world to blow up places like the Ukraine. And then who gets all of the contracts to rebuild it? Well, it's BlackRock. So they hold down the price to make the weapons, and then they're there to rebuild everything. This is all about money. This is a lot deeper than people think. But it's been exposed. It's been exposed by half of the world understands what we're doing. You ain't seen anything yet, in my guess, is my guess. So, I get it. It would have been better to buy it all along. People should have listened to you a long time ago. This is the argument for cost averaging. I've been buying every 2 weeks for 35 years. I remember gold at $250. I remember silver at $3. And so here we are at 3,000 and not a damn word by the media. Silver is that opportunity that you missed in gold because it should be a whole heck of a lot higher by every metric, and it's coming out of the ground at a 7-to-1 ratio to gold. So if you have gold right now at $3,020, if we take 3,020 and we divide it by 7, which would be the geologic ratio right now, you're at $435 an ounce. So if you told me tomorrow morning gold would be over 400 or silver would be over 400, most people would laugh, but I would say, well, that's actually logical. That's the geologic ratio. So I would say, just cost average your way in, and it's not too late. And that real value is found in silver right now.
The rapid rise in gold prices and the persistent undervaluation of silver highlight a significant shift in market sentiment. As investors move away from traditional assets and seek stability in precious metals, the financial landscape continues to evolve. Despite concerns over market influence and price suppression, demand for gold and silver remains strong, reinforcing their role as essential stores of value. Could the growing recognition of precious metals as financial safe havens lead to a fundamental change in global market dynamics? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.